In early 2026, the global economy was running on a fragile baseline. The world remained heavily reliant on Middle Eastern oil, while gold sat at historic highs, perfectly positioned as the ultimate geopolitical safe haven. Then, military hostilities erupted between the US, Israel, and Iran, instantly triggering a massive military blockade of the region. The instantaneous closure of the Strait of Hormuz paralyzed regional trade, while sending a paradoxical shockwave through the global economy, one that broke the traditional rules of the market. Overnight, 10 million barrels of daily production vanished. Crude oil predictably spiked past $110 a barrel, a reality consumers felt immediately at the pump. When war breaks out, investors follow a century-old playbook. They panic, they sell off their risky stocks, and they flock to buy gold. But in March 2026, the data showed a massive anomaly. Instead of surging, gold plunged 13.6%, marking its worst crash since 2013. We had a global conflict and skyrocketing energy prices. So why did the world's oldest financial shelter collapse exactly when investors needed it most? This map shows the Strait of Hormuz. At just 21 miles wide, it handles 20% of global petroleum. When the blockade hit, 15 million barrels were trapped daily. Overland pipelines lacked capacity to take over, with zero alternative maritime routes. The domino effect hit regional infrastructure immediately. With nowhere for the crude to go, domestic storage tanks maxed out, forcing Gulf refineries to shut down their operations entirely. The International Energy Agency tried to stop the bleeding by releasing 400 million barrels of emergency global reserves. But you cannot paper over a physical choke point of this magnitude. The blockade guaranteed a sustained global energy deficit. That physical oil deficit quickly bled into the broader economy. Energy costs dictate the price of moving and making and growing almost everything on Earth. With crude prices holding above $110, global shipping and industrial input costs spiked, signaling an unavoidable wave of inflation. This graphic illustrates the concept of non-yielding assets. To fight inflation, central banks are forced to keep interest rates high. If investors can earn 5% risk-free in a savings account, holding a block of gold that pays zero interest becomes a toxic financial strategy. The physical oil shock didn't just make fuel expensive, it altered the math of global investing, turning the previous safe havens into liabilities. On the institutional trading floors, the inflation panic set in. Global stock and bond markets went into freefall. That sudden market drop triggered margin calls, urgent demands from brokers requiring investors to immediately produce cash just to cover their massive market losses. When you get a margin call, you cannot sell the stocks that are already crashing. You are forced to sell whatever is currently profitable. This chart shows exactly why gold was targeted. It had rallied 24% in the months leading up to the war. Because it was the only highly profitable asset left on the books, institutions liquidated it to raise cash. At the exact same time, central banks were forced to dump their own reserves. They needed billions in immediate cash to afford importing oil at newly inflated prices. Gold didn't crash because it lost its intrinsic value. It crashed because the panicked global economy was forced to use it as an emergency ATM. During the oil shocks of the 1970s and 1990s, physical wars caused localized panics. Investors could safely park their wealth in precious metals and wait out the storm. The 2026 conflict proved that in our hyper-leveraged financial markets, isolated safe havens no longer exist. In moments of extreme market volatility, solid physical assets like gold are always sacrificed for immediate cash liquidity. The global economy is wound so tightly that a single 21-mile geographic choke point can rewrite the rules of global finance. The traditional wartime financial shelter is dead. When the physical supply chain breaks, cash is the only king.